Hello and welcome to our educational video on earnings reports in the stock market. Today, we will be discussing everything you need to know about earnings reports and how they impact stocks. What is an earnings report? An earnings report is a financial document that companies release every quarter to show their revenue, profits, and losses during that specific time period. These reports provide insight into a company's financial health and give investors an idea of how well the company is doing. What are the key parts of an earnings report, you might be wondering? Revenue. This is the amount of money a company earns from sales or services during a specific time period. It is an important part of an earnings report because it shows how well a company is performing in terms of generating revenue. Net income. This is the profit that a company earns after all expenses have been paid, including taxes. A positive net income means the company is making money, while a negative net income means the company is losing money. Earnings per share, EPS. This is the amount of profit a company makes per share of its stock. It is calculated by dividing the net income by the total number of shares. EPS is an important metric for investors because it helps them determine the value of a company's stock. Guidance. This is a forecast of a company's future earnings and revenue. It is an important part of an earnings report because it gives investors an idea of what to expect from the company in the coming months or years. We will break down an older earnings report and look at the impact it had the stock itself from the past. Let's take a look at a real-life example of an earnings report and its impact on a stock. Apple, one of the biggest companies in the world, released its Q2 2021 earnings report in April of this year. The report showed that Apple had generated $89.6 billion in revenue and had a net income of $23.6 billion. This was an increase from the previous year's Q2 earnings, which had been impacted by the pandemic. As a result of the positive earnings report, Apple's stock price increased by 2% the day after the report was released. This is an example of how a strong earnings report can impact a company's stock price in a positive way. In conclusion, earnings reports are important financial documents that give investors insight into a company's financial health. They cover key aspects such as revenue, net income, earnings per share, and guidance. A positive earnings report can have a significant impact on a company's stock price, making it an important metric for investors to pay attention to. We hope you found this video informative and helpful. Thank you for watching.